So what is my take on the ETF with the ticker GRNB? Great question. Let's go through it together. Step 1, go to the website. And I went ahead and brought it up after you asked the question. Go to the website of the fund provider. So in this case, it's VanEck. VanEck, I don't know. I do not know this fund provider very well. They are not a major player in the ETF space. So for me, that's like a yellow flag. You have to be extra vigilant if you're thinking about investing in this kind of a fund. There's also a higher chance that cheaper funds doing the same thing are offered by the larger firms. Companies like Vanguard, State Street, and BlackRock have economics of scale on their side, so they might be able to offer the same fund at a lower price because the fixed cost would be spread among more investors. So let's take a look, though, at what VanEck is offering here. We're going ahead and tracking the S&P Green Bond US Select Index. Okay, so we are index investing. I love index funds. That's great. We still need to make sure that the expense ratio is cheap. Now, the expense ratio here is 0.2%, 20 basis points. I like to keep the expense ratio under 20 basis points. Now, you might be saying right now to me, John, what's the difference between 1 basis point? What's the difference really between paying $1 more per year for every $10,000 you have invested in it? And the reason I draw the line at trying to keep it under 20 basis points is I find a lot of firms in the ETF space, when they decide that, they want to make money, they're not interested in going as low as they really can go, they stop at 20 basis points. They will just offer a fund at 20 basis points because enough people think it's low cost that they can benefit greatly. But when I see 20 basis points on a fund, my mind immediately thinks, hey, some firm might be offering it cheaper. 20 basis points is where a lot of firms stop to try to maximize the profit they're getting off of it. So definitely a red flag for we want to research it more. We have a small company, or smaller company. The biggest three are State Street, Vanguard, and BlackRock under the iShares brand in the world of ETFs. And for State Street, their ETF brand is SPDR, SPDR. So we're going to want to check out their lineups. We see 20 basis points, another reason to do some additional research. Let's keep going forward here. This is an ESG fund. So if you're looking at this, you're probably interested in ethical bonds. You're interested in lending out money in an ethical way. Now, this bond fund is a little different than other ESG funds. Instead of excluding the worst actors, this fund is trying to buy bonds from the best. In short, it's buying bonds that are being issued. Remember, you're loaning money to companies. They're being issued to environmentally friendly projects. So we don't see a lot of holdings here. It's not very diversified relative to other bond funds. Right? Instead of thousands of bonds, we have a couple hundred, but it's very ethical. We are looking to just lend our money and buy bonds that are being funded by projects you probably like. Great. Let's go ahead and do some other additional checks. Kind of scroll through. We see gross expense ratio is 0.2%. Great. Net's 0.2%. Great. Awesome. Anything else we want to check here? Just kind of scrolling through, getting a feel for it. You may want to compare the performance here versus other funds we find. Not so much that I put a lot of pressure on past performance and future performance, but because you found a very niche product, right? You're just loaning money to ethical actors. There might be other funds that do a good job at that in general. It's a lot harder to compare. Like if you were going to buy an S&P 500 fund, whatever firm you're buying it from, probably pretty similar, unless somebody's overcharging for it. In this world, especially with a niche, non-major fund provider, we want to try to be careful when it comes to proper management here. So we want to make sure if you do end up with this fund, that their performance is in ballpark of other ESG funds that are lending their money to ethical firms. Great. Anything else? We see the top 10 holdings here. This is worth looking at. We see some bonds being lent to Ford and General Motors. To me, this screams that this is probably associated with the fact that GM and Ford are interested in electric vehicles. So you'd want to go through here, get a feel for what they're investing in. But all in all, this may or may not be a good fund for you. My biggest takeaway is while this fund does check a lot of boxes, it also raises some flags that makes me think there might be something better out there that offers a similar investment strategy, but at a lower expense ratio. But do your research. This may or may not be the fund for you. That's something for you to decide. But hopefully my walkthrough of the fund and what I'm looking for helps give you some thoughts when it comes to your personal portfolio.